With federal student loan repayments restarting in October, I'm starting to hear a lot more from people about how it's going to affect their lives, their budgets, and what some of their fears and concerns are. I'm Andrew Weber. I'm a certified credit counselor and a certified student loan counselor. I talk to people almost every week that are starting to deal with this upcoming new really line item in their budget that they've not prepared for in over 3 years. So what I think is that pretty much any debt that is not as significant as a federal student loan is going to be prioritized less. That means credit cards, unsecured debts, medical bills, private student loans especially. I'm hearing a lot from people that are just going to have to let their private loans go or try to settle them when federal loan repayments do restart. So IRS debt, mortgage debt, auto loans, secured loans, things like that, people are still going to prioritize over their federal loans. But everything else, I think we're going to really see take a big hit as far as delinquency rates, default rates. I'm personally expecting to hear about a lot more private student loans that are defaulting, a lot more defaulted credit cards, personal loans, and things like that. I talk to people all the time that say, well, I'm able to afford my private loans now, but when federal loan repayments restart, I'm not going to be able to. So what can you do to prepare for that? You're probably hearing from a lot of influencers that are reading these different articles and kind of chiming in, and that's great, but I'm an actual practitioner. So after I make this video, I'm going to go back to calling Chase to negotiate on a credit card, or calling Sally Mae to negotiate on a private loan, or calling one of my clients to check in and see how they're doing. So it is a little bit different when you have long-term experience dealing with these people's individual problems and just hearing how this process plays out and helping people through these kinds of issues rather than just reading the news and posting a screenshot and talking about it. Anyway, I just was told last night by an influencer that I was policing their content because I told them that they were saying something that wasn't accurate about FFEL student loans, saying that they were private. So just a little riff on influencers there versus actual practitioners and certified financial professionals. So going forward into this next phase of this year, you're going to be hearing a lot from people that are going to be giving you advice on how to deal with your student loans. Make sure that the person you're talking to or listening to maybe has a couple of these or has maybe done this for a little while. So my number one tip, and I'm going to keep kind of beating the drum on this one, is go to studentaid.gov. Look at your repayment options for your federal loans and find something that's affordable. If your payment is still very high, even on the income-driven plans, it's not a bad idea to consider a short-term deferment or even a forbearance. A deferment is better because it's going to limit the interest accrual on the subsidized portion of your federal loans. A forbearance is not going to limit the interest accrual on either your subsidized or your unsubsidized loans. But it's not a bad idea to give yourself a break on payments if you're just not ready for this to restart in October and you need to budget for rent and food and just your household and your family. So don't be afraid to look at a short-term deferment. The key there is short-term. Deferments and forbearances really should not be more than for 3 to 4 months. And I'm talking about normal deferments and forbearances that accrue interest or accrue some interest. Aside from that, look at how you can lower your bills or your liabilities on the other accounts aside from your federal student loans. If you have private loans, your lender is probably not going to work with you on lowered payments unless it's some kind of a short-term plan. Again, it's not terrible to do one of the Band-Aid options on a private loan for interest-only repayments or something like that. But for long-term, maybe think about settling it, think about refinancing it, think about a way to get rid of that loan or to make it more manageable. For credit card debt, credit card debt is at an all-time high right now. So I think those are specifically going to be impacted by the federal loan payments restarting. And there are a lot of debt settlement companies I've been hearing about that are either popping up or kind of gearing up to deal with the demand of that. But you got to be careful with the traditional debt settlement companies. They do charge a pretty high fee as far as their negotiation charge, which I personally disagree with. Most companies, it's 25% of your total debt amount. And I've talked about the traditional debt settlement model and the flaws of that in the past. So if you're going to hire someone to help with your credit card debt, just be careful about the kind of company that you choose there. But it's really about trying to make your federal loan payments manageable, evaluating your options at studentaid.gov, talking to your servicer perhaps if they are one of the good servicers or if you get a good customer service person, but the federal loan servicers have come under fire in the past, and for good reason. So verify what they're telling you. Look at studentaid.gov, compare your options there to try to get that federal loan payment manageable. Then look at options to reduce your payments on your other accounts or your other types of loans, your other liabilities, and you're probably gonna have to kind of pick and choose which accounts and which loans and debts to prioritize. So if you need help with that, let me know. Let me know what you guys think in the comments.